And welcome. This is Mary Ellen McGonigal here with your Friday afternoon MEM Edge show. And as always, this is the show where we bring you where the action is in the broader markets. A bit of a flat week, similar to last week, as we digest the sharp advance that we saw take place in November. So here we are with the first week of December in the books. I'm going to share with you where we closed for the week. Take a look at some of the action that is taking place. We talked about that. Beneath the surface, earnings is continuing to be a driver, but the reduction or the reduced interest rates also impacting the markets. And we did have some headline news. Most importantly was that today we did see U.S. employment data for the month of October come in fairly strong. We did add about 199,000 new jobs. And then also those wage numbers remained hot. They remained sticky. So both areas very closely watched by the Federal Reserve. I will say the response was rather muted. And that muted response was in line with good news that came out earlier in the week by way of private jobs, ADP numbers coming in, showing a slowdown in openings. So the markets, again, really seem to be in pause mode as we assess what is shaping up for the rest of this month. Now, next week does get more by way of critical data. We're going to get core CPI and PPI numbers. So please keep that in mind. So let's go ahead and take a look at those markets and see where did we close for the week. And here we are with the daily price chart of the S&P 500. And as you can see, we did have a lot by way of back and fill trading action. It was not until today's about a 0.5% rally did push this move today above this flat base formation that's been taking place over the last 2 months. So that is certainly good news. Now, we do have that RSI entering back into a potential overbought position if we get up above that 70. However, as you can see, we've been able to maintain relatively good underlying price action despite that positive RSI. Now, what I've been on the lookout for is a potential with this stochastics. If that black line gets down below the red, historically that has preceded at the very least a small pullback and then of course a larger correction. We did dip below that on Wednesday. That was a bit concerning, but you can see we've been able to right that by way of the stochastics now trending sideways. As always, you will want to pay attention to price action beneath the surface at this point in time, keeping an eye on those mega cap magnificent 7 names. We will review those stocks today, and then also shuffling or rotation potentials taking place beneath the surface. We're going to get into that, of course, as well. But at the end of the day, the S&P 500's near-term uptrend remains in place. Now, from here, let's go ahead and take a look beneath the S&P 500. We want to look at those underlying 11 sectors. I've sorted this 2-month daily price chart view by that RSI. What we are on the lookout for is a movement of sectors that are up here at the forefront that may be descending into this weaker area down here at this lower right quartile. And then, of course, the opposite, those areas that are down here in this lower quartile and are trending upward. So first up, we can see XLRE up here at the forefront. And overall, the group was rather flat for the week, but it is remaining up here. I will share with you at least 2 areas in the industrials that are helping keep this uptrend very firmly in place for the industrial sector. And then also as we move through, we do have underlying groupings that have been up here. If you go back and take a look at last week's show, you will note that financials were very much up at the forefront. This is another area that was down 0.2%. So really relatively flat, but maintaining its presence up at the forefront by way of relative outperformance. I'll share with you again the area that is driving this nice advance in financials. Moving through XLRE. Now, this is a group that was mostly flat this week as well. Again, take a look at these advance that we've seen going into this week, certainly in line. We are definitely in a pause period, and it makes sense. We do have XLRE is an area of the markets that fares well in a period when rising rates are pulling back. It allows these companies to, in essence, expand their portfolios with lower borrowing costs. But if you go ahead and take a look at last week's show, you'll see a couple of REIT stocks that I recommended at the end that have continued to remain quite healthy. So if we are looking beneath and we want to be on the lookout for areas that are exhibiting potential strength coming back into play, that would be technology. Technology's sideways price action has taken shape for longer than other sectors. And a lot of this has to do with the fact that those Magnificent Seven, the technology sector, is overweighted by Microsoft and Apple, and they've been mostly flat in line with those other mega cap names. We did see vibrancy shaping up toward the end of the week. And then another underlying area, which I will share with you, that is helping keep technology vibrant and now on the cusp of breaking above this late November low. And it's in a nice confirmed uptrend. And this is what we want to see. We want that leadership area going back certainly April into August. And then during that month of November, we do want to see that resume, because loss of leadership is when you can get into potential trouble by way of the broader markets suffering as well. Now, also of note with technology is that RSI, with this pullback and then sideways price action, has allowed this RSI to, in essence, reset, pull back, and then really allow for further upside here on the technology sector. Let's go ahead back and take a look at some of these other areas that are not faring quite as well. And here we are, XLC. This is internet related. And the wonderful thing is that we did see a pretty pronounced pullback in these internet-related stocks, certainly last week. Mega cap Meta and was down about 4%, Netflix as well, and that 3.5-4% decline last week. But super, super compelling to see that we have been, over the last 2 days, able to reverse that pullback. You can see that RSI dipped into negative territory on Wednesday, but over the last 2 days, we have been able to regain that bullish RSI, with the stochastics remaining up here in positive territory. Again, we'll get a look at those mega names as we move through. From here, we want to look beyond these broader sectors. It's really important that you not only get the sector right when you're looking to put money to work, you're also going to want to make sure that you're in an industry group within that sector that is also experiencing relative outperformance. And the primary reason is not simply because they're outperforming. Oftentimes, these groups, sectors, and then hence the underlying stocks are outperforming because they have dynamics that are fundamentally supporting the demand in those stocks. So let's go ahead and not waste a minute. Take a look at this group that is up here at the forefront. Those of you that follow my work with my twice weekly MEM Edge report will know that we capitalized on this move back into, this is XHB, the Homebuilders ETF. We did put a couple of names on the suggested holdings list back here, and a couple of factors that put us into these stocks. Number one is, if just quite simply looking at the chart, the individual stocks tell a very similar story, but nice high volume on this downtrend reversal attempt, and then a gap up into a period from here where we did have back and fill, this flat base formation, and then another breakout. All of this, of course, having to do with two key components. One is back here, a number of housing, home building stocks were coming in with really strong numbers, and also management guiding growth higher going forward. That demand factor among the new homes was there despite high interest rates. This more recent advance is related to that pullback. And I will share with you in yields that will help these home builders continue their path of growth. So let's go ahead and move forward. In the Dow Jones, we talked about this last week, the fact that it is at a new high. And let's go ahead and pull up a monthly here and confirm. Actually, we're not quite at a new high, but we are at a new near-term high. And a lot of the information relative to that, take a look at last Friday. Those dynamics are still very much in place. That is helping support these industrials because it is now a broad-based index as opposed to being just industrial focused. So we talked about financials on the move higher. Let's take a look at one of the key components. Here we have KRE. This is the regional banking ETF. I'll just take a minute here and mark it up. This is an area that was up about 3.5% last week, and that's relative to the S&P 500, which actually was up about 0.2%. So we did have clear-cut outperformance. I am going to have to apologize. I was in the throes of potentially building a high tight flag formation. Let's see. Well, okay, we'll just then consider this a breakout of a high tight flag formation, and then this nice channel uptrend that is shaping up beyond that as these regional banks continue to come under accumulation. This is another area that we embraced back here with my report upon a move back above these moving averages. Quite simply, these bank stocks are tending to fare better if we see a nice continued downside in interest rates so that lending activity will increase, but also confidence among investors that this banking crisis period is behind us. And this is all from my work, quite a bit of digging deep research and getting a good sense that Wall Street has now changed their stance to a more positive one relative to the outlook for these banks. And then moving along here, IGV is the software ETF. It did pull back this week, but again, not entirely unexpected given this sharp advance. And again, as well, all about the fundamentals. There have been a number of well-known software companies that have come in with very strong numbers, and some of them more recently. Again, take a look at my MEM Edge report. We've been actively involved in this nice uptrend here. But if you're looking at the broader group and wanting to participate, you will want to note that, again, we remain in an overbought position with the stochastics poised to turn. I would not load the boat up at this point in time, but by and large, very constructive price action among that software sub-industry grouping. Another area that was flat this week, but that again is good news. This is XRT, the retail ETF, and you can see we have been exhibiting a nice uptrend here. A lot of these down and out retailers, not a lot, there is selection among those that are participating here. Again, earnings as your driver, but also that interest rate scenario is helping some of these other areas, reduced inflation. We've seen a nice pickup in travel. I'm going to share with you a couple of names that are travel related that are in nice uptrends. But again, coming out of that overbought on that RSI, pulling back this, we want to see this. I know certainly for me, I was just wanting to put money to work, but we were just seeing this pullback shape up. And it was an ideal point to add some positions, but not as exciting as this period where we were seeing a pronounced uptrend taking place. Semiconductor stocks flat for the week. Let's take a look. This is another area that pulled back, and then we are seeing a renewed uptrend, all while that RSI remained up above 50. Now, as we move through, let's go ahead and take a look at another area that is very critical to investors, and that is a view of the yield on that 10-year Treasury. And here we are, a very, very nice pullback in interest rates. We did get up to 5% at one point here at the end of October. And you can see that even into yesterday, we were down close to that 4.1% level. And that is very, very constructive. But as mentioned, despite this pullback, we didn't see a lot by way of fanfare and investing. The markets, again, over the last 2 weeks have been mostly flat as they've digested that big November move. And we can see today's news, not only relative to employment and wages, consumer sentiment also jumped. So we did see today rates getting back up to that 4.2 level. However, at this point in time, 4.2 is still relatively low. If you were to go back and take a look at those rallies that took shape earlier this year, it was during this 4.2 range. So, of course, it is something that we will be keeping a close eye on. We do get that core inflation data next week. So we want to keep those interest rates at bay so we can see a nice continuation rally in the broader markets. So from here, I did mention that I would share with you. Actually, I have the chart for oil. This is Brent crude, and I did want to point out that it did fall last week. We're down about that 75 level. Energy stocks were the worst performers, down 3.3%. And of course, that downward projection in oil prices is one of the reasons. So let's take a look at those mega cap FANG names is what I'm calling them. I'm sure I need to rename this to the Magnificent Seven. But what we are viewing here is a 2-month daily price chart view, and it's sorted by that RSI. So when we're looking at these stocks, I did mention to you that by and large, we had a lot of either with Microsoft, a pullback, Tesla back and fill, Netflix, a pullback. So what I wanted to do here is go ahead and share with you some of the newer, I may call it developments, since that more flat base formation, we are seeing a bit of a pickup. First up here is Apple. And you can see that earlier this week on Tuesday, we did experience a nice flat base breakout. Take a look at that volume, very, very constructive there. And we already had the momentum with the RSI up above 50 and remaining there during this back and fill formation. Also on that Thursday rally, we had a nice black line up through the red MACD rally, talked about that volume, and we are now in a nice uptrend there with Apple. Next up is Amazon, and really this stock has been in a go nowhere environment. I get asked this a lot in my live trading rooms, but when you are looking at a name that is really just going nowhere, it's not a reason to sell it despite vibrancy elsewhere. You have positive RSI, positive MACD, so the stock could conceivably be setting a stage for another leg up. So keeping a close eye on that name. Microsoft is one of the names I mentioned that pulled back. It did fall below this 21-day simple moving average. When we have this pullback, many people may be tempted, if we break this 21-day, pretty decent volume, to lighten up. But really what you want to do is pay attention to that RSI. It stayed up there above 50. So we're in good standing. Again, a very, very high advance here, and certainly do a pullback. You want to keep that in mind. So also moving through, I did want to share with you another stock that pulled back 2 weeks in a row and a significant 4.5% pullback last week. But let's take a look. We've regained that uptrend with a move back above the 10 and 21-day moving average, RSI above 50, trending higher. I talked about this. This is one of the names from my MEM Edge report, the fact that the stock does have a predisposition to pull back, and for the most part, can recover quite quickly. They are at the forefront of AI and other developments. Moving through, Google also reversing from an even sharper pullback. Not my favorite at this point in time. It did have earnings that were not particularly constructive, was able to recover, but pulled back more than those other names. I have other names that I would favor instead of Alphabet at this particular time. But net, we need only take a look at a weekly chart to alleviate any near-term fears, because longer term, the RSI and MACD are above net neutral. So you are set up for success longer term. One other chart I did want to share with you relative to the broader markets is a view of those names among the Nasdaq that are above their 50-day simple moving average. This is a chart that I did began sharing back here at the end of October into the beginning of November, because we were seeing the most vibrancy in these growth names at the beginning of that November rally. And then since then, we've seen a nice subsequent rally even this week, despite that flat performance. Let's take a quick look at the weekly here, and the percent of names that are new as far as coming back above their 50-day moving average within the Nasdaq expanded by another 5.5%. So we're continuing to see, you might not see it because of those mega cap names overweighting, but beneath the surface, lots of names that are joining the uptrend in that broader market indice. From here, I did want to share with you, I talked about XHB, and actually we can start with consumer discretionary names. And the consumer discretionary group was up 1.2% relative to the broader markets that were mostly flat. Of course, the Nasdaq was up 0.7%. But when we look at consumer discretionary, I'm going to share with you the fact that first up, the airlines, there were reports out last week, and they showed record number of travelers over the Thanksgiving holiday, which gave great boost to the overall group. This is JETS, the ETF for airline stocks. On that news, a gap up into a nice continuation rally as this group continues to reverse this downtrend. So from here, we can take a look at other travel related names. Of course, people are not always traveling and going to others' homes. They are in need of hotels, rental cars, and so forth. So we can take a quick look. Now, this is a name that has moved in line with that airline view, JETS, but I did want to share with you, after this big sharp rally into the end of November, we had that nice base formation. This is Expedia, by the way, EXPE, and now we are in a secondary sharp rally. Also wanted to share with you, with among those travel related names, we can take a look at Airbnb. And this is a stock that has waffled around here of late, but let's take a look at this downtrend reversal that took place last week. Pretty decent volume, and in turn, it did push that MACD into positive territory where it joined an already positive RSI, putting the stock into an uptrend. This is another name that we recently added. And then from here, taking a look at one other area among the consumer discretionary area is a beauty-related product, all about earnings. This is Ulta Beauty, ULTA. Take a look at that gap up, very nice volume, in turn, which pushed the stock out of a multi-month base. Now, at this point in time, we are in essence digesting this significant move, but the stock is now in a nice uptrend. From here, we can take a look at another stock that's not as dynamic, but certainly in the same group, and that is Estee Lauder. EL is the ticker, very much in the beginning stages of a potential downtrend reversal. Would not be my first pick, but it is that kind of add-on play where you see a well-known company come in with strong numbers, and you can then drill down, take a look at other names that are also in that grouping. Now, going back to that move into housing stocks, I did have a couple of names here that I wanted to share with you that really work in tandem with the housing industry, and they are going to be, for instance, mortgage providers. As an example, this is Cooper Group, a smaller name, COOP, and you can see that we had this nice base breakout that took place on Friday of last week into a nice uptrend. And that's the kind of thing when I talk about those add-on plays that can really be constructive, where you can broaden out your exposure to a group that is moving higher because of fundamental dynamics. Next up here is Opendoor Technologies, OPEN, an online real estate platform. And you can see they reversed their downtrend at the end of November in a nice confirmed uptrend. Other areas that we can look at are going to be quite simply those companies that provide building materials to these new home construction companies. Now, this one, of course, already up and out. IBD is installed building products, gap up into an uptrend. But again, conceptually, hopefully you can see what I am sharing with you, that concept that when a particular group comes into favor, how you can broaden out your view to look at stocks that either provide services or products to that group that's now in a nice uptrend. And I'm going to leave it there. Everyone, if you like what you've seen, go ahead and hit that like button. And any questions, topics that you'd like to see covered in next week's show, by all means, put them down there. I'll be sure and cover that. Last up, I hope you have a fantastic weekend. I'm going to look for you again here next Friday.